We've got it. We've got it. All right, you are go. You've got it.
Big Brother, mainstream media, government cover-ups. You want answers? Well, so does he. He's Richard Wood with Z News.
You've got it. We see the earth now. You've got it. We see the earth.
Welcome, my friends, welcome. We will be live here with you for at least the next 30 minutes. If you're hearing this transmission, you are the resistance. Thank you for joining us for this, the 114th podcast edition of Z News, which is a compendium of information on business, finance, economics and social and political issues worldwide, reaching over 10,000 subscribers every Wednesday and Saturday. Parts of this publication are picked up by 60 different websites weekly, exposing our ideas to over 10 million investors a week. It is Wednesday, the 18th day of May, 2011. Coming up on the show today, dollar weakness will continue. History says gold is the only real currency, and a need for real change in the economy. In US market news, dollar weakness that has continued will continue. That is to make US goods cheaper and more saleable as exports, but the flip side is that imported goods are more expensive, and that creates inflation. Such a policy is foolhardy versus foreign nations that have export advantages. Besides, the US does not have the predominance of mass to compete on this level. If tariffs on goods and services were implemented, that would be another story. That, accompanied by a change in tax laws for transnational corporations that would force them to return the $2 trillion they have offshore and pay normal taxation, which would be very beneficial to solve tax, production and employment problems. Remember, we have lost about 9 million jobs over the past 11 years, as well as 440,000 businesses due to free trade, globalization, offshoring and outsourcing. Tariffs would level the playing field and leave no advantage to cheapening one's currency, because it would be accounted for in their tariff structure. Having lost our export markets, we have a jobless recovery that can never improve, nor can our balance of payments deficit and our increasing debt cause not only falling revenues but falling job creation. This is just another artifice to try to stave off the inevitable. Lowering the dollar is not the answer. Having a level playing field is the answer. Price fixing is another exercise in futility, and so is a course of mandatory wage increases pursued to play catch-up with runaway inflation. Even though higher numbers show sales growth, they are misleading and only a reflection of higher pressing inflation. This is not economic growth. It is price inflation. Such an exercise is geared to keep people and business solvent, but in the long term it accelerates inflation and leads to worse problems down the road. The economy is exhibiting deterioration at the edges, and that is to be expected for an economy that has been so badly misused. What is left of manufacturing is in decline, and until a system is purged, such deterioration will continue. It is not only the US, but also the UK and Europe that have followed the Keynesian course and then display suppression when inflationism overrides their systems. These governments are short-sighted and do not possess the strength to cut expenses and raise taxes. They will come slowly when it is too late. They do not seem to understand balance and sacrifice. Price regulation and wage controls are artificially answers and only expose economic decay and in time fail to work. This value distortion leads eventually to a barter type system which is inefficient. Then again, this would not be necessary if the current system had not been abused as it had been. This is what happens to nations that wallow in debt in excess of 100% of GDP. The excuses are multifold, but the result's always the same, and that is default. Those who created the system in which we are now enmeshed know exactly what they are doing. This game of controls and more money and credit only buys time to pick the right spot to pull the plug and begin another war. We can never understand how bankers can believe the system will collapse, but they remain immune. These same bankers have been, in part, responsible for current and future inflation and the proliferation of derivatives, which create a foul system within a system. Once these derivatives unravel, they will create an explosion at the heart of the banking system that will take out the top 5 banks in the US. There has been no reform, and there will not be any. Chaos will come when it is too late, as will regulatory reform. The proliferation of fiscal debt will continue, as will the exorbitant creation of money and credit. They cannot stop. If they do, the system will collapse. That will happen, but only when those driving and controlling the system allow it to do so. We have just witnessed the disinformation calculated to deceive the public into believing that there is a recovery afoot. Nothing could be further from the truth. What little upside that was seen was a lift via price inflation. When figures are released, there is never an addendum explaining that if inflation were removed, what the statistics would really be. That is why we have a 5 to 10 year bull market in gold and silver ahead of us, whose presence is so powerful that no governments or central banks can regulate, suppress, or overwhelm it. We have learned from studying the history of currencies for the last 6,000 years that gold and silver are the only real currencies. Recently, we have seen a 40-year hiatus, but of course, in the history that is the blink of an eye. Being mortal is disturbing because you can see history but not the future. But we say You can approximate the future by learning about the past. History. The history of man. Bankers wed to the fractional banking system really despise gold as a backing for currencies, because it does not allow them to create infinite amounts of money and credit. This leads in time to monetary debasement and the kind of conditions we are witnessing today. As we said previously, we have seen an almost entirely unnoticed titanic struggle between the US dollar and gold over the past 2.5 years. And gold has been the winner hands down. Now we are seeing the inflation factor come into play. The Fed at the same time continues to support the bond market to keep interest rates low, even going to the extent of manipulating the Treasury inflation protection securities to create an illusion that inflation is a minor factor. The manipulation of bond prices in the US Treasury market has all but driven all investors, both foreign and domestic, away from these markets. Finally, investors, particularly professionals, see the situation for what it is: plain and simple fraud. In addition, they are tired of observing the scams totally lacking in prosecution, to say nothing of the selective corporate welfare which has been doled out to fellow Illuminists. All they can see is unbridled monetization and inflation and lower dollars as far as the eye can see. In recent developments, the US, England and France have declared a so-called NATO war against Libya. They have frozen $32 billion held in trust by the US in the US. That is the largest amount ever held by the US concerning a foreign country's asset. The three countries want Libya's oil, 4 water aquifers, central banks and their 484.5 tons of gold, plus the Libyan funds held by other countries. These three want to steal it all and leave the country destitute. The EU has, in addition, frozen $67 billion. It is thought that because the US is desperate for funds, that they will now put into the economy those funds to help keep the economy from collapsing. The US Treasury and the Fed have created a giant bond fraud, and the world's professionals and governments are well aware of it. If they have to take the US dollars in trade, they have to take the inflation that comes with them. They not only have to tend to inflation in their own economies, but fight off dollar inflation as well. That is why nations are dumping US dollar as soon as they receive them by buying raw materials, investing in land, real estate, plant and equipment, and gold and silver. The bankers and the Western governments now expect us to believe that Osama bin Laden is dead. He died years ago. This is just more propaganda for a distraction to more important matters, such as the deterioration and collapse of the Western financial system. Anything to keep the game going. Anything to deceive. We see no comment in any media that the US and European countries had frozen some $32 billion in US banks and $67 billion in European banks of Libyan sovereign wealth funds. As you have seen, desperate people do desperate things. These funds do not belong to Mr. Gaddafi, they belong to the Libyan people. It is simple. The West is broke and needed the funds. When you see Chatham House all over the European news, you know the black nobility executed this. As such, events occur. We have Fed Chairman Mr. Bernanke totally lacking integrity, telling us there is little inflation and that the Fed just needs more time to complete recovery. What recovery? It must be hiding, because we do not see it. What the Fed is doing is no monetary experiment. It has been tried over and over again through the centuries, and it is well known among professionals that what Mr. Bernanke is doing does not work. When you hear from Mr. Bernanke that commodity price effects will likely prove transitory, when there has been a bull market in commodities since 1999, and that bull market is getting stronger, you have to question Mr. Bernanke's integrity. He reminded us of the dollar's previous comeback, proved the safe haven status of the dollar. How laughable. The rally created by banks was market rigging. We exposed what they were up to early. They are now running the euro up to make even more profits. This week or next, the euro should reverse its rally as meetings resume in Greece. To these people, currencies, gold and silver, commodities and markets are like footballs to be kicked around. It is not surprising that long-term confidence in the dollar is falling. As uncertainty and instability along with climbing inflation are becoming noticeable. There is no question the Fed has spent many years off course, serving its owners and controllers in banking and on Wall Street. This time it is different. This time they are taking the whole system down deliberately to force the peoples of the US, UK and Europe to accept world government. This is not abrogation of responsibility or incompetence. This is willful greed and destruction. In QE1 and QE2, the banks and Wall Street were saved and then the Treasury. Little was done to address what was going on in the real economy. All credit, monetary and fiscal policy was used to extend the health of the financial community and select transnational conglomerates. Speculation has been the result of credit expansion, almost all of which was pointed at Wall Street, banking, and AAA-rated transnational conglomerates. We find it interesting that all commentary and reports are based on Fed assumptions. Their policies and endgame are rarely questioned, especially when other professionals know what they are up to and they know it does not work. Is it because they are Keynesians? In part, yes, but the key is they are afraid to speak out because if they do, they lose their jobs. In some cases, are suicided. These people play hardball and they are unmerciful killers. If you don't believe that, just look at all the wars they have created and financed on both sides. You cannot approach what the money powers are up to with logic and reason. You are dealing with a predatory animal that will, out of hand, kill its own for power and survival. How can anyone believe the Fed chairman when he tells us that there are well-anchored inflation expectations when real inflation is about 10%? And even the uneducated public understands that. This is a monstrous lie. All and sundry know that. Yet the media and the powers behind government perpetuate that lie, cloaked in propaganda. As a result of such prevarication, gold and silver hit new highs. That has, of course, brought a barrage of sell recommendations from the regular suspects on CNBC, CNN, and Bloomberg, along with comments of silver mania, bubble, etc. What is worse, though, are the 96% of newsletter writers who have been consistently wrong for the past 5 years. It is sell, sell, and switch to gold. The coin dealers go right along with the program for profit, of course. What a woeful gaggle of dunces and opportunists. The public doesn't believe the Fed inflationary lie, nor do professionals believe a weak dollar is good for the economy. For Bernanke to even allude to higher official interest rates is laughable. These same expert observers go right along with the perpetuation of what the Fed has done for a century, and that is rob the public blind. Very few want to return monetary policy to the Treasury, and perhaps honest, transparent policies that put the American people first, not Fed shareholders. As we said 3 years ago, the Fed will expand money and credit until it cannot anymore, and then they'll have a new world war to eliminate population and distract the public's attention away from social, financial, and economic chaos. Right now, the big push is to sell silver, to buy gold based on the gold-silver ratio. We have been in the markets for 12 years and that ratio has never worked. All the traders who listen to this foolishness will end up last in line. Jackrabbit trading is for losers. We know, we were traders for 15 years. What does not seem to be self-evident among investors and others is that the same group controls the Fed and the Treasury. They do what they feel like doing, and the media, which they own and control, does exactly as they are told. Writers and commentators say we need more rules to control the Fed. What we need is an end to the Fed, but these weak-willed characters refuse to say that because they do not want the wrath of the elitists down on them. What a scurrilous group. There are not going to be heavy rules because the people who control the Fed have purchased 95% of Congress and the judiciary. There has to be violent and radical change, and unfortunately, there is only one way that can come about. In gold and silver related market news, last week the gold suppression cartel looked increasingly desperate as, for the second time in a week, the CME, which owns COMEX, raised margin requirements on silver in an attempt to keep silver from breaking out to all-time highs. That is why yesterday's big gains were diminished. The 5,000-ounce futures contract initial margin requirement, or deposit, rose to $14,513 per contract, up from $12,825. Maintenance for overnight rose to 10,750, up from 9,500. Hedges maintenance rose from 9,500 up to 10,750. Yesterday saw a surge in gold prices that was unexpected and came in the path of softer silver prices. JP Morgan and HSBC used the margin increase to cover shorts in a totally rigged silver market. German March sales fell as inflation rose 2%. Adjusted for inflation, sales fell 2.1% month on month and 3.5% year on year. In Spain, sales fell 8.6% year over year in March, and in Greece they fell 10.6% in February. The EU Business Climate Indicator fell for a second month in a row to 1.28 points from 1.43 in March. As we pointed out, not only were there two margin increases in a week, but government was busy calling commodity brokerage firms and extorting them to put in major upward changes in house margin requirements. Right at it was DT Ameritrade and real biggie Man Financial. This shows you what it is like in a country that has a corporatist fascist government. The catalyst for the move downward was the supposed killing of Osama bin Laden, who really died in December 2001. What we witnessed today was pure criminality. Another prominent firm that raised margins was MF Global, which is run by ex-Goldmanite John Corzini. Ted Butler has now lost all credibility by saying the CFTC and the SEC will ultimately crack down on SLV and GLD, which are legitimate and kosher. Give us a break, Ted. He obviously wants to join the lying crooks on Wall Street. Silver backwardation has widened to 90 cents. Bolivia's President Evo Morales has backed off mine nationalization as the miners insisted he stop the action. Gold open interest fell 754 contracts to 531,882. April Turkish gold imports rose 2.19 tonnes in April versus 0.903 tonnes in March and 0.8 tonnes year over year. Construction spending rose 1.4% in the first quarter. March private construction rose 2.2% and residential rose 2.6%. Year on year, it was off 7.8%. April ISM manufacturing slowed in April to 60.4 from 61.2 in March. Today's silver bloodletting began in Sydney as silver fell 12% in 11 minutes. July delivery in Singapore fell as well. The big silver buyers will not be run off easily. Silver demand in India and China will rise 30% this year. Bloomberg reports China will use 1/3 of its dollar reserves to buy gold. They have only 1.6% of the reserves in gold. What we were told today that the major US stock exchanges are receiving hundreds of complaints a day, and one has a pile 4 feet high. The complaints were about naked shorting by the US government via New York City banks and brokerage houses and hedge funds used by government. Yesterday saw spot gold fall $16.60 as June fell $18 in backwardation as shorts try to cover. Spot silver fell $3.50 as July fell $4.51. After increasing silver margins last week twice, they raised them again. Initial margins rose from 14,513 to 16,200. This again is your government inaction. Trading early in gold was off $13.80 and silver $2.32. From there they were off all day. The blatancy of the assault was the most obvious ever. What you are seeing is a desperate coordinated attack in the course of which we believe there is little short covering. Normal markets do not act anything like these manipulated markets. Silver open interest fell 1,633 contracts. There are still 1,052 open contracts, or more than 5 million ounces, part of which will be delivered. The ECB said there were no changes in gold and gold receivables from last week. The HUI fell 19.34 and the XAU fell 5.32. In the shares, Agnico Eagle Mines fell 3.42% or $2.28. Goldcorp fell 2.90% or $1.53. Silver Standard Resources fell 2.01% or 63 cents. Minefinders fell 4.46% or 70 cents. And Pretium Resources fell 5.30% or 50 cents. India's central bank raised interest rates by 0.5% as inflation rises out of control. The 10-year T-note yielded 3.25%. The yen rose 0.42 cents. The euro fell 0.16 cents. The pound dropped 2.02 cents. The Swiss franc rose, however, 0.39 cents. And the Canadian dollar fell 0.35 cents. The USDX rose 0.15 cents. Oil fell $2.40, gas fell 1 cent, and natural gas fell 2 cents. Copper rose 5 cents, platinum fell $15.16, palladium fell also $8.50. And finally, the CRB fell 3.12. Before signing off today, we would like to thank all of our subscribers for making these broadcasts happen. None of this would have been possible without your continued valuable feedback and support. New listeners are able to follow me on Twitter at Richard J. Wood or the Z News feed. On our Facebook fan page for the latest stories we are following, and to hear my regular radio interviews on the air or online. Also, don't forget to like and also to share these podcasts with your Twitter followers and your Facebook friends. Coming up on the program tomorrow, the American standard of living diminishes. Millions on food stamps. And numbers in the poorhouse raise up. Be sure to join us then. I'm Richard Wood and this has been Z News. Because you can handle the truth.